Hello my friends, in this episode I'm going to show you how to prepare journal entries for basic business transactions. This is a typical foundational task in any bookkeeping course or exam. By the way, I'm Christy, the bookkeeping tutor, and I love to support you by breaking down how to solve your bookkeeping exercises. I hope you'll find this one easy to follow. Let's get started. Our task today is to prepare ABC's company's journal entries for the transactions that occurred in the month of February. You can download the task from the description below. So the first thing is that you shouldn't get overwhelmed even if there are heaps of transactions listed in your exercise. We tackle them one by one. That's the best strategy. So take a deep breath and let's read the first one. The owner paid currency unit 12,000 into their business account as capital to start up the business. Let's stop here for a minute. CU stands for currency unit. Because you may watch this video from all over the world, I didn't want to use in the exercise dollar or pound or euro. Instead, I'm using this CU currency unit, and you can substitute any currency you would like. So let's get back to the exercise. So the owner paid 12,000 into their business account as capital to start up their business. This means that the business received 12,000 cash to its bank account from the owners, and the owner's investment in the business increased by the same amount. So the cash increased by 12,000 as well as the owner's equity increased by 12,000. Okay, so it's time to determine the two sides of the transactions in accounting terms. The cash increased by 12,000. The cash is an asset account. The increase on an asset account is a debit. Therefore, we need to debit the cash account by 12,000. With the same logic, the owner's equity increased by 12,000. The owner's equity is an equity account. The increase on an equity account is a credit. Therefore, we need to credit the owner's equity account by 12,000. Our last task is to draw up the journal entry. Now we have all the information for doing that. The reference number, the date of the transaction that was in the task description, then a short description of the transaction or narrative if you like. Then in the first line, the account to be debited. In our case, the cash account that is debited for 12,000. I'd like to highlight that normally the account type is not part of the journal entry. I included it only for presentation purposes in this presentation. In the second line, we write the account to be credited. In this case, the owner's equity that is credited for 12,000. So when the owners pays their capital contribution into the company's bank account, it should be recorded as debit the cash at bank and credit the owner's equity with the same amount. So the second transaction was that the business owner purchased a piece of equipment for 5,000 and paid for it by cash. So the business purchased a piece of equipment for 5,000 cash. So the business paid 5,000 cash to a supplier for an equipment, but they have the equipment, so the equipment, which is a fixed asset, increased by 5,000, whereas their cash decreased by 5,000. In this transaction, the cash decreased by 5,000 as well as equipment that increased by the same amount. The equipment is an asset account. The increase on an asset account is debit. Therefore, we need to debit the equipment account for 5,000. The cash decreased by 5,000. The cash is an asset account. The decrease on an asset account is credit. Therefore, we need to credit the cash account with 5,000. So when a business purchases a piece of equipment for cash, it should be recorded as debit the equipment account and credit the cash account with the same amount. Let's see the third transaction, when the business purchased some goods for resale for 1,500 and paid in cash. So the business paid $1,500 cash from its bank account to a supplier for some goods. At the same time, they received the goods that the company plans to resell. So the purchases increased by $1,500 and cash decreased by the same amount. The purchases is an expense account. The increase on an expense account is debit. Therefore, we need to debit the purchases account for $1,500. The cash at the same time decreased by $1,500, and the cash is an asset account. Therefore, the decrease on an asset account is credit. Therefore, we need to credit the cash account with $1,500. So in this case, when business purchases some goods for resale for cash, it should be recorded as debit the purchases account and credit the cash account with the same amount. The next transaction is that the business paid $500 rent in cash. Now you know it, of course. The business paid $500 cash from its bank account to pay their rent. So the cash decreased by $500, as well as the rent expense increased by the same amount. The rent expense increased by $500. The rent expense is obviously an expense account, and the increase on an expense account is debit. Therefore, we need to debit the rent expense with $500. At the same time, the cash decreased by $500. The cash is an asset account. The decrease on an asset account is a credit. Therefore, we need to credit the cash account by $500. So when business pays its rent by cash, it should be recorded as debit the rent expense and credit the cash account by the same amount. So the next transaction is that the business sold some goods for $3,000. They issued an invoice and they set the payment term as 7 days. So the customer needs to pay within 7 days. The business sold $3,000 worth of their products to a client, so their sales increased by $3,000. But their clients got credit and they don't need to pay at once. So at the time of the transaction, the business didn't receive any cash, but they have the right to collect the amount in 7 days. That is called in accounting terms receivables. Therefore, the receivables increased by $3,000. What we have here is that the sales revenue increased by $3,000. The sales is a revenue account. An increase on a revenue account is a credit. Therefore, we need to credit the sales account with $3,000. So the receivables increased by $3,000. The receivables is an asset account. The increase on an asset account is debit. Therefore, we need to debit the accounts receivables account for $3,000. So when a business sells goods on credit, meaning that the customer will pay at a later date, it should be recorded as debit the accounts receivable account and credit the sales revenue account with the same amount, of course. So the next transaction is that the business purchased some materials for $2,000 on credit and the payment is due within 14 days. So the business purchased the materials for $2,000, but they didn't pay for it on spot by cash, but they get 14 days to pay. So they have the liability to pay within 14 days. In accounting terms, this is called accounts payable. At the same time, the company received the materials they purchased, so they possessed the materials. In this case, the materials increased by $2,000 as well as the accounts payable increased by the same amount. Because the materials increased by $2,000, the materials account is generally an expense account, so the increase on an expense account is debit. Therefore, we need to debit the materials account for $2,000. The accounts payable increased by $2,000. Accounts payable is a liability account. The increase on a liability account is credit. Therefore, we need to credit the accounts payable for 2,000. So when a business purchases materials for the production on credit, it should be recorded as debit the materials expense account and credit the accounts payables account with the same amount. The next transaction is that a customer paid their outstanding invoice totaling to 3,000. So the client paid the outstanding invoice and the business received 3,000 into its bank account. We have already accounted for the sales revenue before, and this amount was sitting on our accounts receivables. As we have received this outstanding amount now, we cannot claim this from our customer anymore. Therefore, the receivables decreased by 3,000, as well as the cash, because we received it, increased by the same amount. Because the cash increased by 3,000, the cash is an asset account. The increase on an asset account is a debit, therefore we need to debit the cash account. The receivables decreased by 3,000. The accounts receivable is an asset account. The decrease on an asset account is credit, therefore we need to credit the accounts receivables for 3,000. So when a customer pays an outstanding invoice, it should be recorded as debit the cash account and credit the accounts receivables account with the same amount. So the next transaction is that business received utility bill for 500 and they have 30 days to pay. The utility bill needs to be paid within 30 days. This means that we consume the 500 worth of utility, electricity, gas, whatever, but we don't need to pay for it now, but we need to pay within 30 days. So our utility expenses increased by 500, as well as our accounts payable increased with the same amount. The utility expense is obviously an expense account. The increase on an expense account is debit, therefore we need to debit the utility expense account. The accounts payable increased by 500. The accounts payable is a liability account. The increase on a liability account is a credit, therefore we need to credit the accounts payable account. So when a business incurs utility expense, it should be recorded as debit the utility expense and credit the accounts payable with the same amount. Okay, and the next transaction is that the business paid 1,000 wage to its employees from the bank account. At this phase, we shouldn't be dealing with any taxes or the payroll liabilities. We just need to record the wage expense and the fact that it was paid from the bank account. It means that the company incurred wage expense that was paid from the bank account. Therefore, the wage expense increased and the bank balance decreased. The wage expense is obviously an expense account. An increase on an expense account is a debit. Therefore, we need to debit the wage expense account. The bank balance decreased by 1,000. The cash at bank is an asset account. The decrease on an asset account is credit. Therefore, we need to credit the cash at bank account by 1,000. So when a business pays the wage from its bank account, it should be recorded as debit the wage expense and credit the cash at bank account with the same amount. And finally, our last transaction is that the business paid 2,000 outstanding liability to test suppliers. So we paid our suppliers. You remember we already took up the purchase before and recognized it as accounts payable. So what happens now is that the company pays off its liability using their money in the bank. So the accounts payable decreased by 2,000, as well as the cash at bank also decreased by the same amount. Because the accounts payable decreased by 2,000, the accounts payable is a liability account. The decrease on a liability account is a debit. Therefore, we need to debit the accounts payable account by 2,000. The bank balance decreased by 2,000. The cash at bank is an asset account. A decrease on an asset account is a credit. Therefore, we need to credit the cash at bank account by 2,000. So when a business pays to its suppliers, it should be recorded as debit accounts payables and credit the cash at bank account with the same amount. Okay, that was massive, wasn't it? Well, the key takeaway is that you shouldn't get overwhelmed when you see a complex exercise, but you need to tackle each transaction as if it were a standalone transaction. And if you know the basic transaction types, it's rather easy to draft the journals one by one. And if you noticed, I use over and over again a simple method which I call UTE, understand, translate, and enter. If you want to know more about this simple method that helps you draft journal entries, please sign up to my free Bookkeeping One-on-One course. I hope you find this video useful. If you have any questions, please reach out as always. Until next time, take care.